Happy New Year to all. I wish your family health, happiness, and prosperity in this year. Welcome to my channel, Real Estate Edge with Jimmy Singh. In this first video of the year, I like to talk about things that buyers and sellers should know to navigate this changing market. So in this detailed video, I will break down into what we can expect in regards to home price appreciation trends, inventory supply changes, mortgage interest rates, buyer demand, and new home sales. So I will start this video first speaking for sellers. There's multitude of reports online put forward by CMHC, different top brokerages, and economists. And they are saying 2026 will be recovery year. And some of these people said the same things about recovery in 2025, but in my personal opinion, 2026 won't be a recovery year. I don't believe that. I'm confident that certain segments of the market will do better than the others all across Greater Toronto Area real estate housing market. And starter single family homes, if strategically priced, will get lots of showing and get sold in fast time. As prices have deteriorated last year, we have seen sales have started to pick up. There's like an inverse relationship because of the affordability. But we have a real economic structural issues in Canada, and those need to be resolved across Greater Toronto Area, Canada, for market to revive and the confidence to come back in our marketplace. And it will take time. I personally think if COVID market never happened, we won't be in this situation. We saw house prices spiking, and the growth which was supposed to happen in the next 10 years, all the growth was squeezed in 2 to 3 years during pandemic. And that price growth was not healthy, unsustainable. So now we are in a correction mode where prices are adjusting slowly and steadily in line with historical appreciation, which was between 3 to 4%. And now I have seen certain markets where prices have drifted down in real estate housing market to 2021 level. Some places house prices are down 20 to 25%, and in certain pockets which get lot of boost during pandemic, they are even down more in those parts. So if you're a homeowner, here is the truth, which probably you won't hear from a lot of people. That is, your home won't be worth more in 2026 versus what it was worth in fourth quarter of 2025. So my suggestion to a lot of sellers when I get calls during weeks, last week I have 6 evaluations. So I tell most of my sellers, have a game plan, get in the market as quickly even this year in January and beat the supply issues later in the spring. Because that is the time when everyone wants to sell. And that is the strategy I'm encouraging my seller clients to consider. Who knows how many houses come in the market? How is the supply situation next year in 2026 or this year as a matter of fact? So don't forget also, folks, 2026 is the year where most mortgage renewals will be upcoming in Canada. I met some people last year, went to their homes for evaluation, and I have noticed their equity was upside down, meaning they owe more in mortgage what their house is worth. So these were the tough conversation I had with the clients We had never had this situation in 10 to 15 years previously. I've been selling real estate full time for close to 20 years, and people in 15 years prior to pandemic or during at the peak of 2022 first quarter, they haven't seen bigger corrections yet. So those are the tough conversations I had with the clients, and we never have to do that previously. And even I remember having conversations in early 2020, 2021, where rates were historically suppressed, mortgage 1.5, 1.7, and the homes were soaring 20, 30, 40,000 every month. And every renewal during pandemic or those decade, people just refinance after 5-year renewal and borrow to invest or buy car, go on vacation. But now what I'm finding is they use that money to sometimes help their kids get into the housing market, open businesses. But now situations have changed, and all those mortgages, low interest ones, which people took during 2020, 2021, even 2022, those are coming up for renewal. And unfortunately for some of the people, they have no equity. And I met a lot of people last year who have maxed out on their line of credit and visas. Unfortunately, some have lost their jobs, and those problems keep compounding. And these people now can't qualify for refinance since banks lend sometimes for line of credit like 60% loan to value or refinance 80% loan to value. So another interesting trend I noticed and discussed with my team during 2025 is uptick of power of sales, especially from private lenders, because people borrow if they can't get from the bank, and now it is hurting them because they are squeezed out of cash flow. And some people, unfortunately, I have seen in the market, they have sold at losses. And it took some people now back 8 to 10 years, because if your house goes bank foreclosure power of sale, it reflects on your credit report. It stays there for 8 to 10 years. It's going to hurt folks. The reason being is if you go try to borrow for any kind of loans, car loans, they're going to give you very high interest. So be careful. If you're in that kind of situation, talk to your bank. Banks understand, they get it, how the market is, how the prices have come down. They are, want to deal with you. So if you lost a job, you want to miss 2-3 payments, I'm pretty sure a lot of savvy lenders, they want to work with you. So have the conversation. Or if you don't have any broker helping you out, give us a call. Our team will certainly assist you in that matter. Another thing I want to tell you is, as a seller, when you are putting your house up for sale, especially in mature neighborhoods, there might be some elderly folks or people who can afford to lose some money on the house. Why? Because a lot of them have their houses paid off. As a matter of fact, in Canada, 40% house owners, they have zero mortgage on their property. So you have to understand, yes, they don't want to lose money, but they have a house paid off, they have money in the bank, so they can sell a little bit cheaper, and it can hurt evaluations in the neighborhood. And some of them, they might sell big house, maybe downsize to a condo or a bungalow. That might be their priority. So you are looking at that trend as well. We have a lot of tough conversation last year with our clients. Some of the people, they reach out to for the first time. So when I met them, in hindsight, they wish they had these kind of conversation prior to buying properties. But I feel the froth is coming off the market, and the flushing is, happening in the market. A lot of people are getting hurt, and that is the unfortunate part. Now coming to the mortgage interest rate, what I can see and what kind of suggestion I want to give to my customers. So folks, mortgage, you have to know your life plans. Would you be staying in your property to 5 to 10 years? Is this the last house you're going to buy in your life? There's so many different variables. Do you have any family expanding? Your parents are going to come with you. So those things have to be considered. But overall, variable rates were better in long term versus fixed rates, because people who have variable rates in last decade, they are ahead. They paid off their mortgage faster because variable was less as compared to fixed rates. And even with the recent Bank of Canada rate cuts, I have seen now variable are better deal than fixed, but some banks are getting aggressive and offering good deals on 5 or 4 year fixed mortgage. So depending if you are in a situation where you want stability in the payments, you have a budget, go for fixed. But at the end of the day, just remember, if you have a variable mortgage and you break your mortgage within your 4 or 5 year term, the penalty is only 3 months interest penalty. Whereas if you have a fixed mortgage 5 year and you break the mortgage in the second year, you have to pay interest differential that can be thousands of dollars. Last week I met a gentleman. He bought a pre-construction house and he wanted me to give a valuation and sell the house. And the first question I asked is, since I saw when he bought it, do you have a fixed or variable mortgage? Why? Because I know by my calculation, his penalty should be close to $25,000 to $30,000. And next day he called his bank and confirmed the same number. So folks, be careful on that. Know the penalties. But if you have the stomach for a little bit, volatility, go for variable. And as soon as you notice his fixed rates are coming down in high 3%, just lock fixed rates. That should be your game plan. But I have seen some renewals. I got some renewals on my rental property, my primary. Some of them I just lock fixed. One property I kept it variable just in case I want to sell down the line if I get a good price. So keep all these strategies in mind. Third thing I want to discuss is about buyers. So if you are a buyer, there's great opportunities, choices, options. Take your time, find a good value in the market. There's no rush. Take your time. Shop around for a newer property, resale, do inspections, check out shingles. Right now it's dead winter, so you have to go check out how the heating systems are working, how the furnace is, check everything, because some repairs down the line could be costly and you might not be able to afford, especially if you're a first time buyer putting 10-15% down and you are in process of growing your family as well. So be mindful of that. So I personally believe in this market, it is creating a lot of opportunities for first time buyers. Honestly, nobody in the world can predict, how things are gonna go, with certainty. But one thing, I'm a big believer. I follow Warren Buffett, who's one of the biggest investors of all time. He said, be greedy when others are fearful and be fearful when others are greedy. And I've been investing personally in real estate for a long time, and I look for opportunities like that. If I get a good deal, I buy it. Yes, there's no guarantees in life, but I learned in my life, I'm better off taking chances just, instead of just waiting for certainty. If you want to make good money, whether it's in real estate, stock market, your stomach has to be strong enough to take volatility every day. And as a first time buyer, you also see how the rents have done in Canada. In last 12 months, all across Canada, in most markets, bigger markets, rents are coming down because of the affordability. But eventually you have to live somewhere and, why not own your own property? Because if you're paying $26, $27, $100, $3,000 in a month, now there are opportunities, if not in GTA, outside GTA, London, St. Thomas, Kitchener-Waterloo, those kind of markets where you can, Hamilton markets, where you can buy affordable house and start your life. And always remember, first house is never a dream house. In 20 years of my career, I haven't met a single person I sold the house who lived in the same house for 20 years. Very rare. These days, it doesn't happen. And another thing, you have to know what sort of properties you buy. I get this call pretty much, a question asked every week. So single family homes, detached homes, they grow faster. And eventually when the market will turn, if not this year, in few years, you will eventually make lot of capital gains because in Canada, only place where you don't pay any taxes is your primary residence. So if you buy a first house, I'm working right now with a couple, showing them all kind of houses. Some houses need some work, some houses are done up. I'm right now sitting in one of the properties on sale in East London, 156 Brisbane. You can Google it. We are just asking 439, fully done remodel home, 2-bedroom upstairs, one on the main level, 2 washrooms, good backyard, pretty much new appliances, new kitchen, new washrooms. So these kind of deals are there. In pandemic, I remember looking for good deals under $500,000 for my customers. I can't even find one in entire Middlesex area, even Elgin County. Now we are getting a lot of good deals. So buy something, live for 4 or 5 years. Eventually your career will pick up, your family needs will evolve. Maybe keep as a rental, move to the next property, but buy some good value property where you don't have to do anything. And another thing I want to talk about is move up buyers. So this is the great market for you can negotiate good deals. I know some of you or some of the buyers, they have bought condos or townhouses during crazy times of 2020, 2021 in pandemic, because that time you felt that you have to jump in the market and buy something, whatever that may be. But maybe now you have outgrown that house, or your needs have changed, or you want a bigger space. Give us a call. There's a lot of opportunities. And if your job is stable, you have savings, find a property in a good neighborhood. This is a great time you can get into it. Yes, your townhouse or condo might be down few $1,000s, 10,000, 20,000, but the bigger detached properties, they're down 50, 80, 100,000 in many cases. So if you do the calculation, you can sit with us. We'll do all the calculations, how much you will net at the sale of the house. And we can talk about commissions, fees, how we can save you money, all those sort of things. So just, keep these things in mind and take advantage. And I also believe that supply with the builders, they're going to take a hit in next 18 to 24 months, because in 2025, market was slow for builders because they have to make certain profit margins on the construction, because costs have risen, land values have risen, and they have cancel lot of projects. And I have seen some builders, they are putting their new construction townhouse condos for rent altogether. So supply squeeze will come, but we will notice 18 to 24 months down the line, then those prices will pick up in that segment, which people want. Because I remember 20 years ago, when I bought my first house, that time you need 3 times your income to buy an average home. In the crazy pandemic market, it went to like 10 to 11 times your income just to afford a housing. That's crazy. Something has to be done. But now froth is coming, things are getting corrected. We are coming in line historically, and in many places now prices are back to 2021. And I have seen some areas which are hit harder, Niagara belt or certain parts of Durham region, prices are coming down 30 to 35%. So they are losing all the gains of pandemic. And so builders will come into play, because if you're a first time buyer, your budget is close to $5,000, $6,000, $7,000, $100,000, and you look around resale and newer deals. Some people want brand new, you know what I mean? We sell new homes every month, every week. So give us a call. And here's my final thought, folks. 2026 is not going to have explosive growth, price appreciation in real estate. I don't care what other people are saying, but looking at the economic data, looking at consumer confidence, looking at the inventory, I feel inventory will stay the same or increase in some markets in 2026. And affordability will again be a challenge. We are still looking at 8 to 10 times income in bigger cities. In smaller cities, if let's say in London your income family is 115, you can still buy like 450, 500,000 house. So people will still look for affordability, and all the rush of people in last few years heading to Alberta and other parts of Canada, those prices also have picked so much that you can actually have the same priced house in around GTA, in London, Hamilton, Kitchener-Waterloo. So because if you check in Calgary, unless you have a relocation job, otherwise it doesn't make any sense for a lot of people to move there. And again, snow is like crazy as compared to GTA. And folks, waiting is no guarantee you will get advantage of low rates, because I have noticed next year, in US, Federal Reserve Governor will come down. I think his term is finished. Donald Trump will have new people. They will aggressively cut rate cuts. And as I said, our fixed rates are dependent on bond market. And personally, I saw in last couple of weeks of December, bond market is indicating, rates are coming up. So fixed market, don't be surprised. Fixed mortgages will trend up. And if our economy keeps struggling, they might cut few rates. But Bank of Canada governor last time says, he doesn't believe that cutting rate is the solution, because there is intrinsic challenges structurally in, our economy. So I'm not sure how many rate cuts. Some people predict maybe 2 rate cuts of quarter point next year, but you can't time the market. If you ask me, is the January rate cut coming? I don't think so. And for sellers, my sane advice, which I'll give to my family, is know in this market, buyers are more selective. They are more value conscious. So if you want stronger showings, you need to price your house strategically. Call an agent who know what they're doing, and real estate is all they do. That's their full-time job. They're not doing like 4 other jobs. Work with people who are in the market. There are a lot of good agents. Call 2-3 people, get their opinion. Free advice doesn't hurt anybody. So if you are a homeowner wondering when is the good time to sell, or you are a home buyer trying to time the market, or a real estate investor watching to get a good deal, in this market, planning more than anything, like timing is, the way to go. Your strategy and planning is very, very critical in this market. So the people I see succeed in 2026 real estate market, if you're a home seller or a home buyer, are the ones who are not waiting and hoping with their finger crossed. They are working with, experienced realtors who know what they're doing and getting in the market without fear. So what do you guys think next year? Would the real estate prices fall, grow, remain flat? What about mortgage rates? They're going to go up, down? Please kindly leave your comments. Thanks for watching my video. This is your friend Realtor Jimmy Singh, broker of record, Supermax Realty. You can reach me at 647-961-2639 in regards to any questions you have for real estate market. Our team sell all across Greater Toronto Area, London, St. Thomas, Kitchener-Waterloo. Thanks for watching. God bless.